Hello and welcome to a brief preview video ahead of Friday's non-farm payroll reading for January. So in terms of expectations, the headline today expected at 180,000, the low range being 105 to a high of 270, but that follows a pretty poor reading in January. So we saw 74,000 from an expected 195,000 going into that figure, but that put down to adverse weather conditions across the United States in the month of December, which could be a theme carried over to January's reading, particularly as we had that polar vortex covering a lot of the United States, so could see a quite large miss or gain on expectation due to that weather uncertainty. Now, in terms of recent employment data, ADP on Wednesday, that was a relatively decent number. It was 175,000. It did actually miss expectations, but much better than the non-farm reading we saw in January. And in terms of ISM readings, the manufacturing reading on Monday, slight disappointment, the headline worse, as well as the employment component. However, non-manufacturing on Wednesday was actually better for the headline and better on the employment. So again, has been fairly mixed. Doesn't necessarily help with the whisper numbers and estimates heading into Friday's figure. But a lot of focus will also be on the unemployment rate. So last time that fell to 6.7% from 7%. A lot of that due to quite a few people dropping out of the labour force, which again could continue for the January reading. At the end of December, we saw those emergency employment benefits actually expire, which means there's 1.3 billion people that received those that could potentially drop out of the labour force, which could mean a drop once again in the unemployment reading. And that's particularly important considering the Fed's 6.5% unemployment threshold for the first Fed's fund rate hike. However, as we've neared that, has been expectation that the Fed would likely drop or at least lower the unemployment threshold. So it could be a bit of pressure on the Fed to adjust that at their next meeting, which is in March. Now, in terms of market reactions, if it is a fairly sizable miss, as was the case in January, we could likely see that knee-jerk reaction, particularly lower in stocks and higher in treasuries. However, it depends on the factors behind that, and as we've already seen with the January reading, due to weather uncertainties, could mean that we see a quick pairing of those moves. But again, that's at the usual time at 1:30 on Friday, so that's 7:30 in Chicago. Good luck with non-farms, and thank you for listening.